Hello traders, the title of the video is how to trade Fibonacci retracement like a trading machine. This is not a joke. Today I will show you how to trade Fibonacci retracement like a trading machine. But here is the deal. For me to talk to you or to explain to you how to trade Fibonacci retracement like a machine, you must watch the full length of this tutorial. The reason is, if you watch only part of it or you skip it, you will miss out. So I'll leave it to you. The decision is yours. I'll keep my part of the bargain, and I hope you will also keep the part of your part of the bargain. All right? So we're going to start drawing Fibonacci retracement on our chart, okay? Like the machine will do. So you may say to me, what do you mean by machine? That's a very, very good question. So in the financial market, most of the trades that are taken when New York is open are taken by a machine. What we call machine, we are talking about artificial intelligence. We are talking about trading algorithms. We are talking about trading robots. We are talking about trading software, automated trading software. All right. Chart pattern recognition software, all the machine, that's what we say, something that human beings are not doing. So I will tell you, all right, how you can trade Fibonacci retracement like a trading machine. All right. So some of you may say, George, I know about Fibonacci switch disposal, Fibonacci 50% retracement, 61.8%, 78 points. So everybody know 38.2%, 50% Fibonacci retracement, 61.8%, 78.6%, 88.6%. Those are the most popular Fibonacci retracement levels. All right. Now, how do you trade Fibonacci retracement like a trading machine? As I said to you, keep your part of the bargain and watch the full length of the tutorial. Otherwise, you will think that you understand what we are doing here and you will miss out big time, and you don't want to miss out. You do not. So price went up from A to B. Come here. So here. Stay with me, please. It's a demonstration to show you how the trading machine are trading the Fibonacci retracement. So price went up from A to B. The trading machine are watching the zone between the 50% and the 61.8% level. Are you still there, or you already gone? Or you gone? All right. If you're still there, it's good. Watch the demonstration, please. I know a lot of traders will click away and they will miss out big time. All right. So after you have drawn the Fibonacci retracement from here to here, right? Now the price pull back here, it start going up. How do you draw the next one as a human being? How do you draw the next one? How? As a human being, how you draw it? A lot of human beings will go like this. Yes or no? So the price going up, people drawing their Fibonacci retracement like this. All right? Okay? But then after they have done it, you can see that the price pulled back to the switch exposed zone. So the first one that we were drawing, you were here. Did you see that? It was between the 50% and the 61.8% level. That's where the price did change direction. The trading machine are buying in that zone quite often. It's not that they are automatically buying, though they are automated trading tool. There are rules that are set in place. Talking about artificial intelligence, there are criteria that the computers are implementing in that zone. It's not like they just buy. They have rules. Can be a candlestick pattern, can be a price structure, can be a higher low or something like that, or a bullish chart pattern. There are software that can recognize a chart pattern. So now you see here, they buy here, they bought it there, yes or no? They did. Okay, now when the price continues to go up, human being put it there, yes or no? Again, the computers, again, so you still there, or you give up already? Have you given up? Or say, oh, George, I was expecting something new. Or did you move the video forward? Don't do that. I tell you, don't do that. For this video, don't do that. Okay, so again, so we went to the top. Okay, people highlight again the 50% and the 61.8% level. As you can see here, the price did not, as it was coming down, it did not find a support, okay, between the 50% and the 61.8% level. So a lot of human beings will do like this. They will be watching the 50%, they will be watching it here. But that's not how the computers are playing it. Why do you need to know? All right? You need to know because the computers are not doing the same thing like human beings. Each price move, the computers are highlighting the 50% Fibonacci retracement level. Each price move. So here it is. See, look at this one. So do you agree that the price went up if you put it all the way from the tail here? In that section here, it went up from here to here, that rally there. All right? You see that rally there? Okay, I want to move my first 50% zone to the 50 to our new 50 and the 61.8% level. So the price move that you see from here to there, just from here, that rally there, that's the 50% level. It went up to there. When it was pulling back, where did it stop? It stopped here. So the computers are busy tracking the price, each move. So that's one section of the price. So it went up, it changed direction. That's one section. Watch again. So next section, we'll look at that. Look at this section here. So now it went up from here, it went up there. 50% and 61.8% level. Well, am I lying? No, hold on, it's here. Here you can see now it went up now from here to there. It couldn't go inside that sweet spot zone, but it retested it again. So here it went up there, pulled back to the sweet spot zone, went up there, touched the top of the sweet spot zone. Can you see what's going on in the financial market? Now, one thing you need to retain from this video is that the market is Fibonacci. Can we use that word? Fibonacci. All right, the market is Fibonacci. If you are allowed to say that, then all right. It's all Fibonacci. So stay with me because that's what I'm saying. If you accept the deal, if you sign a contract, which means for this tutorial, you're going to watch it in full. You're not going to cut corners. You're going to sit down, chill out. All right. You can pause it and come back, but you must watch it in full. So now I'm talking about the price going up. You see here. From here. See here? That is because it pulled back. After it pulled back, that's a new move. Went up again, a pullback. What is the 50%? That's the 50%. What is 61? That's below. What it did again, it touched the top of that sweet spot zone as it did here before. It went inside a little bit. All right, let's see what the computers are doing in this market. Is the market becoming so Fibonacci? Fibonacci. Can we use that word? Fibonacci. Now it went up. I'm not cheating. If I did something not correct, let me know in the comment section. I'm doing it in front of you now so you can see what's going on. It went up from here all the way up there. We apply what? Fibonacci retracement to that section again. Where are the 50%, 61.8% level? There. And what is it? 61.8 there. 50 and 61.8% of this move from here all the way up there. Did you see any action there, my friend? Or am I blocking your view? Did you see what's happening? He pulled back again inside that sweet spot zone. Did it bounce up a bit? Yes, it did bounce up a bit. Do you see all this tail here? People try to buy. It bounced up a bit before crashing down. All right, let's investigate again one more time and see how the computers are trading. Now what we're going to do, we're going to apply Fibonacci retracement for that move down. Before it was going up, yes or no? It was going up, now it starts going down now. So we apply again, going down. It's going down. We have to do it like a Lavoisier. From here down here, well, at the 50%, the 61.8% level. Are you getting it though? So it went down from here to here. When it bounced up, where did it go? Again, retesting the 50% and the 61.8% level. Now, you have been using Fibonacci retracement for years, but the game has changed. Probably you were still doing the old dance, but the music has changed. My friend, you need to change the step. But like I said to you, I have not finished. The surprise that I have for you is coming next. So chill out, all right? Chill out, please. Stay with me, please. It's going to become very, very interesting as we continue, okay, this demonstration, all right? How the market is becoming so Fibonacci. You like that word? You like it? Yeah, you do. You do like it, yeah. So now, I'm talking about, you see, it came down, it rallied up down, it started going down from here all the way down here. Okay, so we are investigating that session now, and we had our 50% and the 61.8% level. Now look carefully. This is where I'm telling you that you should watch the full length of this video. And if you watch the video, you didn't reach this point, you have missed out, and you shouldn't, because I told you, you shouldn't. You shouldn't miss out, never. See now, look, this is the sweet spot zone of that move from here down to here. Why the price changing direction instead at 38.2% level? Now it couldn't go back to that sweet spot zone. It was doing it all along from here. It was doing the same thing, blah blah blah. The competitors were trading it. Why not here? I have the surprise for you. Now let me know whether this was a surprise for you. The price, you see this zone here, is corresponding to another sweet spot zone, a prior sweet spot zone. So, like human being, you see, the sweet spot zone that we were drawing along here, we forget them. So you forget them all, isn't it? You forget them all. But the computer doesn't forget them. They are still there. They see them all. They see them, all those sweet spot zones that I was talking about all along, every one of them. The computers know where they are. So when the prior reaches any of those, there is a reaction. So you want to map out your chart piece by piece, as I show you now, and know where are the sweet spot zones. Otherwise, the computers, have you ever played computer game? All right. I play domino. I like to play dominoes. And if you play dominoes with computers, they will beat you. They are so fast. In order to beat them, I mean, it's not easy to beat them because they read pattern. They can, okay, gather more information than human beings. All right. So the surprise here. This section here is corresponding to a sweet spot zone. Which one? You don't know. Or you're going to find out. But the computer already knows. And that's why sometimes they probably go fast because they see it before you. So what I'm doing here, the exercise or the brainwash that I'm doing for you today. George, are we allowed to brainwash people on YouTube? To a certain degree, if you are teaching something without manipulating people, yeah, why not? If it's good for them, with their own permission, look at that. So pay attention to this section here. You see, the price went down from here to here, yes or no? If you disagree, let us know. But try not to reveal your ID because a lot of Fibonacci traders will be chasing you. All right? Just keep it to yourself. All right? Did you see that? They went down from here to here. Where is the 50% or the sweet spot zone? That's the 61.8% there. And this is the 50% level. That move from here to here, the sweet spot zone. Though the price ignore the sweet spot zone of the move from here all the way down here, they did recognize that there was another sweet spot trading zone corresponding to this move from here to here. That's why, again, they were quite happy to sell there. Okay, let's continue because I think you are enjoying it now. So because you are enjoying this demonstration, we keep doing it more. So then stick in your mind once and for all, so you may understand a little bit, just a little bit, what is happening in this messy financial market. So this time, the price went down from here. So all this time, you see, many years, they were doing the same thing all over the place, and still people didn't see it. So now the price went down, you see here, because there was a rally here. Anytime you see a rally, a change in direction, whatever a change in direction, it's a session. Now you rally up a bit. It came down, yes or no? So we are applying Fibonacci retracement to that session. Now we want to put there where is the sweet spot zone. So some traders that are very new maybe say, Joe, you're talking about sweet, but we are talking about trading. What's sweet? Go to www.dayprotraders.com and click on sweet spot Fibonacci. Okay, you will see a web page. Don't go to another web page. Don't look on Google. Just go to www.dayprotraders.com and click on a sweet spot Fibonacci trading. The reason why I recommend to our website to people is because there are a lot of talking. I talk about practical trading. Some traders say, George. You can be proud of yourself a little bit. Okay, now you see now. So we are applying Fibonacci retracement. So the reason I'm speaking to you like this to make you chill out a bit, all right? To make it interesting for you. It's not that, okay? Some traders say, Joe, you're talking too much. Go back to the point. But it's part of the teaching, all right? Sometimes you need to get people entertained a little bit. Then you get them back to the topic again, all right? So they move from here down to this point here. The sweet spot zone is there. Can you see? Look what this action here. Where were they happening? Sweet spot zone, oscillation, sweet spot zone, sweet spot zone, sweet spot zone. The most recent one here. Again, where? In the same zone. Did you notice that? A lot of human beings may not notice that at all. But it's just happening. Whether the sweet spot zone happened years ago, the computers know where they are. And the action, the trading setup that we are looking for, the high probability trading setup, are occurring all over the place in the sweet spot Fibonacci trading zone. So now you understand why I'm using the word that the market, the financial market, is becoming more and more Fibonacci. So what I recommend to YouTube or to Google, any advert that is presented in this video should be charged £5 per click. Now, so they will say, George. Come on, guys. Okay. Now, we continue with the discussion. It's to make you smile a bit, okay? All right? Some traders are very serious. They're always serious. They say, George, we just want to buy and sell. Don't make us laugh. But all those losses you're going through for a year, you need to smile to blow them away. They are all there. Okay, moment of anxiety and pressure, no. So that it went up, okay? I'm talking about this section here. It went up from here to here, yes or no? Okay. Now, where is the sweet spot zone? So, you see, we're going to move the line now, but the computers will not forget where was those lines, where were those lines. That's it. They will not forget that. So our new sweet spot zone is this. Not too far away from the previous one. That's it. Of the move from here to here. Did you see any action there? Again, on the top here. Top. Again, the low also corresponds because the first one, the earliest one we were talking about, were almost in the same zone. So you see, same zone. Okay. And you'll be amazed. All right. Now what am I doing? I'm going to apply it to the move from here to here. All right. And then what do? We want to know where is the sweet spot zone. If you want your technical trading or your Fibonacci trading to become really sweet for you, all right, you need to use the sweet spot zone and trade it like a trading machine, like a algorithmic trading, all right, trading software, trading robot, artificial intelligence, all kind of machine in the financial market. So here again, now it went down. We are talking about this section here, where the price went down from here to here. Now we apply Fibonacci retracement. And we had at the 50% and 61.8% zone. That's the red line here. That's it. Bounce up. Resistance there. Okay. Resistance again. Now we are in now. There we are. Resistance zone. So the month of October closed there in that zone with that shadow there. So the bearish traders are trying to sell it today. As always, we implement a different time frame trading method. So this is a pin that is piercing through almost the median line of the switch exposure. So in fact, the line should be there. I see the 50%. All right, and you want to remember also, because I don't want you to confuse. When you see the switch exposure, sometimes it can be very wide. Okay, the space between the 50% and 61.8 can be wide. You can just remember that. Between two lines, as just said before, for market geometry purposes, we must not ignore the median line. See where you stop it there? Okay. All right. Are you getting now? No. I haven't finished my demonstration here. And I hope you will keep your part of the bargain, which means you promise that you will watch the full length for this video. You will not skip any adverts. And you can pause it and come back to it, but you will make sure you watch it in full so you don't miss anything. So from today, you can call yourself, okay, a Fibonacci trading machine. What I'm doing now, okay, I'm applying Fibonacci retracement for this price move. Which one? Okay, from here to here. I'm putting it all the way to the tail. I'm not using the closing price in this case. All right, so from the top to the low. All right, so we want to know where is our new switch exposure. It's amazing, and it's happening all the time, and you wonder why you didn't see it before. No, you know it, but you were not using it. It's like you have a powerful tool that you put aside, you are not using it, or you have, okay, a very powerful gadget, powerful mobile phone, powerful machine that you are not using. You must use the sweet spot trading zone. You must use Fibonacci retracement like a trading machine. And the machine, they know that it's working and they are using it all the time. Again, can you see that? As went out from here to here. Where is the sweet spot zone? Shh, 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 shh. Same zone before, it touched it before when we apply it to another move. And you can carry on doing this and you'll be surprised. And my friends, sometimes you will be surprised by what is going on in this financial market. You'll be amazed by everything that you see here. So that I'm applying it, okay, this price move from here down here. All right, so you want to see all. Now we down that, and now we move the line to the sweet spot zone. Again, again, again. The same thing is happening, the same thing, the same thing, the same thing. So last time, you get the message now, okay? I'm not going to bore you anymore. So now, oh, it's the other way around. I'm going to apply it to the last portion of the price, okay? Like this, okay? So you say from here to here. So are you clicking away? Are you going now? Are you feeling bored? Don't do that. I have not finished yet, all right? It's very important. I never spoke to trader like this before, so when I'm saying it's very, very important, it's very, very important. All right. So now you went out from here to here, yes or no? So where is that switch spot zone that George you were barking about like a dog? That's there. So you see the most recent price action. I'm on the monthly chart. From here to here, where did he go? Again, to the switch spot zone. What are you looking for? Candlestick pattern, bullish chart pattern, high probability, etc. Look at that pin there. Look at that pin. This one. Look at that pin. But you see this candlestick bar, it messes up some of the swing traders because swing traders are buying here. That candlestick bar doesn't need to come out like this. Probably the market, this is what we are saying, when you are trading financial instruments, you are trading first the market. Probably that day the market went down or something. But normally that tendency but shouldn't come back all the way here. The swing trader were already in the trade. But as the prior hit and resistance, they sold it back down big time. That's a crazy market. You see how messy it was? They just sold it. And then they bought it again. They bought it again. So those who were here, if they didn't manage their trade, so when you want to manage it, move your stop loss, move your stop loss. You see, you must manage, move your stop loss. Otherwise, you see, okay. So that's the sweet spot Fibonacci trading zone of this price move. Okay, from here to there. All right, it's happening all the time. And people just forget about it. It doesn't matter what portion of the price. Whether you see from here, you can do even from here to here, and you apply the 50% Fibonacci retracement level. It doesn't matter. It doesn't matter. Now, the reason why I want you to watch it up to this point is that there is one warning at the end of this tutorial, which is this. You see like this. So far, on a monthly chart, it looks like it looks to you, if you are new, that it looks like a magic formula. The reason why it's quite solid on the monthly chart is because it's on a higher time frame. When I start trading first, I spend most of my life on a 3-minute time frame. And 3-minute time frame. I have my technical indicator on the 3-minute time frame. Every day I come and do the same thing. Now, it's a roller coaster. One day up. I remember one day I remember clearly. The whole day I was trading, all my trade was successful. Beautiful day. Now, I feel like God that day. Now you understand why sometimes I say, oh, trade like God. All right, now you understand why. So the next day, my friend, I lost more than I won the day before. How come? This is it. It's the market's noise. The same strategy I used before on the 3-minute time frame, the same strategy I used the next day didn't work. Something has clicked in my mind. I say, something's wrong. The market noise. So sometimes a lot of new traders, I say this most of the time, but it's so important, that's why I keep saying it. Traders will learn something like this, and they will go. I see sometimes a trader mark some video down, some very, very important videos. Sometimes they mark it down. I wonder, I say, what went wrong here? Or, which means trader didn't get a message. Or somebody go quickly and apply it on a 30-minute time frame, on a 50-minute time frame. And it didn't work. It's a market noise. Use higher time frame for trading strategies, all right, and then break it down to the lower time frame. That is the best approach. That's why, as we were doing the demonstration here, everything looks so like a 1 + 1 = 2, yes or no, almost, for this particular stock. So I can deduct from what this exercise that we have done today, all right, okay, I can deduct that this stock is a very good stock, okay, that is one can use for Fibonacci trading. So this will conclude our discussion today about how to trade Fibonacci retracement like a trading machine. Thank you for watching.